I hope you are well and doing great. Looking forward to this session. Bitcoin trading at $36,000, holding above that critical 35,000. I'm looking forward to sharing my thoughts with y'all here today. CTM, good morning, good afternoon, good evening, wherever you are in the world. I am so glad that you're here. We want to look across everything today. I want to start off, however, with this though. You ready? It's everything that CTM been covering on the macro and for the last 4 months, articulated in a different way. You should hear it because it'll make both click a lot more, including that $28,000 level we looked at, what we call the floor right now. That's our expectations of what the model floor is. Darius talking about that's where the smart money buys a strong and long Friday session here on CTM. We have a lot to talk about with markets seemingly on the verge of either breaking down or holding. It's a big one.
So the Fed raised interest rates by 50 basis points yesterday. This is what the market was expecting. We talked about it previously. I think you were expecting this as well. What's your read on kind of some of the commentary around the actual interest rate hike itself?
Yeah, so I mean, it was mostly hawkish. He laid out a couple of things that were somewhat dovish, and that's why we had the market response that we saw yesterday, right? Big squeeze higher in the market, a big unwind of a lot of bearish options positioning into the event. But then when you peel back the onion, which I did immediately, and I think the market is very much doing today, it was an incredibly hawkish event. I mean, effectively confirmed, which is something that the market had not realized, that this is a Federal Reserve that is very comfortable taking interest rates beyond neutral. And that will cause a panic. It will cause a recession. It will cause things in the financial ecosystem to break.
So when you start to think about that idea of a recession, obviously they're hiking interest rates as we're seeing the economic contraction from Q1. As they continue to increase the interest rate, are we expecting them to actually accelerate the recession? Like if we were at a negative 1.4% growth in Q1, is your expectation that it'll be something worse than that in Q2, or will it stay kind of flat, or how do you read into that?
No, it's actually so it's growth is likely to bounce in the second quarter, right? And part of the reason we saw, recovery off the lows in February is that the rate of change of growth, the second derivative, actually improved from January through, let's call it March or April. We're seeing that in most of the economic statistics we track, with the exception of the PMIs that we got this week. We've seen a lot of strength in the hard data, the retail sales, the consumer spending, the industrial production. So what we saw in the Q1 GDP report was really just a function of inventories and imports really dragging down and outweighing real very solid report from a consumer spending perspective. When we talk about the big slowdown we see in the economy, from our perspective, that's something that looks like a third and fourth quarter event as opposed to a second quarter event. We're in this awkward transition phase from an economic standpoint where growth is slowing and is likely to start to slow at a much faster pace in the coming months, but it's coming from a high level in that level gives the Fed and value-oriented investors a lot of confidence to, one, to keep hiking, and two, to keep buying, and both of those parties are going to be wrong.
Yeah, it's fascinating to watch this. Obviously, a lot of people, as you know, who listen to this are really invested in growth or risk assets, whether that's tech stocks, cryptocurrencies, et cetera. There's this kind of drawdown of price that's occurring. We've seen reports that Tiger Global and some of these kind of tech-oriented funds are down 40+% year to date. Obviously, Bitcoin is down on the year. What's your read in the impact to risk assets or growth type assets as we continue into this kind of interest rate hiking type environment?
Yeah, so it's interesting, right? Like, so there's the macro trade, which is pretty clearly and obviously negative. We're in a slowdown from an economic standpoint. Inflation continues to be at a level that is much higher than the Fed can tolerate or is politically allowed to tolerate. And so they're likely to continue tightening policy. But then you have to layer on the behavioral dynamics, right? Stocks start to go down by enough, cryptocurrency start to go down by enough, you're going to start to see consumers, businesses, other investors demand liquidity at increasing paces, right? And so you're going to start to look around and say, okay, what hasn't gone down as much that I can liquidate to raise cash, or to get myself back to flat from a positioning standpoint, right? That's an issue because people always in these times they sell what they can, not what they should. And so let's say if you're if you were too levered long coins, for lack of a better term, you might look around and say, hey, well, Bitcoin hasn't gone down nearly as much, so let me go sell some Bitcoin and raise cash, right? Because I don't want to sell something down 90%, might as well just hold it. And so to me, I think, I'm not sure that we're at that point of the game yet, but that's certainly a point of the game that we see coming, just given our economic outlook.
And so when you start to think about how this this plays out, if people are selling what they can, not what they should, is it a fair statement that, whether you're a value investor, you got a lot of liquidity, whatever, like now is the time for people to start investing? Or are there certain metrics or data points that you guys are looking at where you're like, yeah, we're going to try to actually wait a little bit more because we think it'll only get worse. And, there's not really true blood in the street. Like, how do you think about either timing markets, identifying bottoms, or like when should the people who don't, they're not forced sellers, like when should they actually start to deploy capital, or how do you like evaluate that from a framework standpoint?
Great question. I think that's the $1 million question. And there's a couple of ways I think as investors, we can answer that question. My general framework on when do you deploy capital in times like these is sort of ignore the nonsense about you buy when there's blood on the streets. That's wrong. In fact, you're proven to lose money if you buy when there's blood on the streets. It's called catching a falling knife. What typically works is you buy when you hear the sound of Federal Reserve ambulance sirens, to clean up all the blood on the streets. And right now, this Federal Reserve hasn't even left the hospital. They haven't even gotten in the truck. And so that's my issue in terms of, buying assets at this particular juncture. I don't believe, at least according to a lot of the indicators we track, whether it be financial conditions, whether it be credit spreads, which are, technically part of financial conditions. It's our belief that financial conditions have not tightened enough to warrant the Federal Reserve, those paramedics leaving the hospital, getting in the truck and going to wherever there is blood on the streets. If you look at something like the Goldman Sachs Financial Conditions Index, which tracks credit spreads, the strength in the dollar, the equity risk premium, real interest rates, and I think there's one more indicator in there. But that index, even as of today, or it'll be updated as of today, it'll get a little bit worse. But prior to this week, it was as loose, and in terms of financial conditions being loose, as it was at the peak of the dot-com bubble. Like, we already seen a 15% drawdown in the stock market, and financial conditions were as loose as they were at the peak of the dot-com bubble. So we've seen nothing yet from a financial conditions tightening standpoint. And this goes back to the comments I've been making on your show and on other shows for the last, let's call it 4 months, 5 months, which is, man, this is a Federal Reserve that is comfortable with pulling the rug out from under us from an asset market perspective. Now, they're going to get uncomfortable at some point, and that's when you want to be getting your cash ready to buy some things hand over fist. I mean, would love to see 28,000 on Bitcoin. I don't think we're going to get there because there's a lot of smart people like myself that are waiting on that level. But yeah, I mean, that's when you take out both hands and back up the truck.
A lot said and articulated that we continue to hold, including that we will pivot our current posture before the market, right? We are cautious, at times cautiously optimistic until the Fed pivots. That's something that we've talked about. He's also talking about $28,000. He doesn't think they're talking about the continued destruction. He was talking about alts. They're talking about high risk. He's saying that there seems to be a lot of further destruction to come. He was talking about altcoins, and he said that they've already come off, some of them 90%. At this point, you may be looking, some of those people need to go ahead and sell some of their Bitcoin, because they can't sell their altcoins. They're not worth anything. So that could definitely, I see that characteristic of the market very well articulated. He's talking about worst case scenario under this Fed tightening and under further selling because of various conditions. He's talking $28,000. That's what he believes, which he refers to, like the smart money, where they will be leaning in as hard as possible, backing up the truck. Happens to be the floor model that we are looking at as well. We put together a lot of good information this week here on CTM. Some people don't realize this is the same trend lines that we've been using here ever since January 2021. The first week of January 2021, presenting these log trend lines coming from CTM, HiveMind, and ever since, that's what I continue to use. We've gotten into it a little bit more, figuring out the particulars, including the slope on the rise up. That gives us an idea of where our floor is. If it breaks, it's not that it can't break. I think earlier in the week, we talked about what type of forced liquidations under $35,000 we may see. It could get dicey down there. It has in the past. But support is support until it breaks. Right now, Bitcoin, it needs to hold that 35,000. my charts aren't lined up because again we went live at the last second, so I need to find the feel for this. So bear with me here as we can find out everything that we got going over here. I'm looking for a particular chart. Let's start over here then. Let me come over to the Nasdaq. Yeah. Yeah, working blind. Sorry about that. Yeah, 28 would be a gift. Look, 28 is not a given that it holds. There's no question about that from a lot of people. There could be a lot of people, and we have talked about that this week, who could. I'm looking for my charts. I'm so sorry. You all know that I'm blind without them. Here we go. Let's start over here. This is perfect, right? So Nasdaq I was looking for. All right, that's sorry, CTM. Thumbs up for that. How about that? Smash the like button if you're happy to be here on this Friday. My next point that I want to make is that the support that we're currently into, it could hold, right? Really don't like, this is the chart I was looking for, by the way, on the Nasdaq, right? Just to give this perspective. We are over here towards this area of support. We could go either way right now. We're at extremes. And from here, you could start seeing some forced liquidations, and it could get really dicey. I'm talking about on the Nasdaq, if we break lower than the next leg down. Is it possible we hold support? I mean, Bitcoin is just beautiful here, continuing to hold that $35,000 support, and support is support until it breaks. There's no question. We're looking at extremes right now. And the best part of all of this, though, by the way, the most sincerest possible, is that CTM 2.0, those that are trading like myself, the buy side only, out of the market since 45,800.